There. Does it say recording on the right side?
It says recording.
All right, cool.
It says recording. Okay. So I'm just gonna, let me just get rid of this side screen over here. Okay, let's get started. So this webinar is regarding the trade we took this morning. The trade was Australian-New Zealand trade. So basically, what I'm going to go over is like how like we basically determined that why this trade is going to be like a good swing trade, which as of right now seems like it should keep dropping down, or it might consolidate here. Anyway, first what you want to look at is, first, always when you look at a pair, what I like to do is I like to look at the weekly perspective, right? So when I choose my currencies, I basically look at all the currencies in a weekly perspective, and this currency here, Australia, New Zealand, it just stood out to me. So from the get-go, I can see right here that the pair reached resistance. So what I'm going to do is I'm going to draw a resistance line right at the top, so over here, and you want to make sure that you extend it enough so you can see what's on your left, right? So here you can see your first candle, the very latest candle, was at resistance. If you look left, you can see that the price was also rejected from this level in the past as well. So now, mind you, this is what, 1, 2, 3, 4, 5, 6, 7 weeks before, right? So that's a long time. After drawing my resistance, I always draw my support as well. Here I'm going to draw two supports. One I see as a minor support, which is this one right here. Oops. And then I'm going to draw my main support, which is way down over here. Okay. Always extend your support and resistance zone so you know that if this was actually held off in the past as well. Okay, so from this weekly, I go down to my daily charts. Now one more reason why I look at the weekly is because I like to know what's happening overall in the market, right? Let me just go back here. Now in the weekly, you can see that in the past few weeks, it has been rallying up, right? So now it has been in an uptrend, so most likely there will be another uptrend, right? So weekly, like it takes a lot of time it takes like 7 daily candles to make a weekly candle, right? So what we're trying to do is we're trying to catch a little retracement to this level over here. Let me see if I can bring okay, yeah, that is fine. Okay, so what we're trying to do is we're trying to catch retracements down to this level, right? So when we go into our daily chart, we can clearly see that the price was actually rejected. Well, it was actually respected at these levels, right? Now, when you're looking at the daily, you can see much more information than you would on the weekly chart, right? So here, what I'm going to do is I'm going to adjust my resistance line up to here. And what I like to do on the daily chart is, if you guys can see these wicks popping out, I actually have a name for these zones. This I call a consolidation zone. So what I like to do in this consolidation zone is that I would like to create a rectangle which covers these wicks. Okay, just like that over there. Let's make this more visible. There we go. Okay, so now this is my consolidation zone. This morning, before we took the trade, this is the information we had. We had information up till this green candle here, right? So what we like to do is now in trading, if you want to be profitable, especially if you want to have those like perfect entries on your trades, what you want to do is you want to wait. Because here in the past we can see that the price actually broke through the resistance zone and it went into the consolidation zone. Right here in the past as well, you can see that it kind of breached out of that consolidation zone, but eventually it came back down. Right, so what we did was we actually waited at this point here. Let me go into our 4 hour. Okay, how do you, bear with me here. Okay, so this is our 4 hour. This morning, before we took the trade, we saw this candle here. This is the candle we saw, right? So what we were basically waiting for the price action to break through resistance, get into this zone, the consolidation zone. Now, when price was at this level right over here, you could have taken a sell. You could have taken a sell, but then at the same time, you were risking a push up, right? So now this push up you could have been in a loss because I mean, if you would have taken a sell right over here, your stop loss would have been somewhere around here, which is almost, I'd say, like 60, 80 micropips, right? So most of you guys, you must have closed your positions, because what I like to say is when I take my trades, I want my stop loss to be as small as possible, right? That's the reason you always want to wait till the price reaches a certain level. So what we did was we waited till this point over here, and then once we saw, okay, the price has broken through resistance, and it has come into the consolidation zone, this is where we took the sell. Actually, let me just make sure what was the exact point where we took this sell. Let's see here, it was, just bear with me here. New Zealand. Okay, so we took the sell at 7199, which would be right over here. This is the point where we took the sell. Let me see if I can place a line over here at this exact point. 7199. Okay, fair enough. This is the point where we took the sell, right? So from here, you can see that price went up just a little bit. I think it was like around like 40, 50 pips that the price went up. And ideally, after taking the sell here, I would always place my stop loss above my consolidation zone, right? Reason why? Because, how do you, oh, let's zoom in. How do you zoom out? Ruben, how do we zoom out?
Use your mouse with the scroll. Like scroll out.
Okay, scroll out.
Yeah, scroll.
Okay, I'm just going to connect my mic. Okay, perfect. Awesome. Okay, so we took the sell over here. Now, one question which people like usually they ask me is like, how do you determine where your stop loss would be, right? One very easy way is to always look left, right? So if I extend this price line up till here, and if I look to my left, that last time the price reached this area was like a long time ago, probably like almost a month ago, maybe less than a month, but you get my point, right? Like that was like a very long time ago. So the next time price would reach this area, it it has less chances to actually reach that area, right? So what you want to do is you want to extend your line over here and then see like where your stop loss could be, right? So ideally, your stop loss, having a stop loss above the recent high would make perfect sense. Okay, right there. So here, I think our stop loss was only 120 micropips away, which is actually really good, because what you guys must have been noticed, like if you guys are still in this trade, what you must have noticed that a couple of hours ago, there was a little push to the upside, right? And even with that push, our stop loss was still safe because you can see that push just touched the consolidation zone and then it dropped back down. That was usually because of the news, right? So once you are in your 4-hour chart and you know, okay, like this is the point where I'm going to take my entry, what you want to do is you want to go, you actually want to zoom in, like go into your 1-hour chart and see actually what's really going on with price action. Because guys, like reading price action is the most important thing you can do in trading. Like I mean, price action can tell you a lot of things. Like here, if you look at this situation here, this is like a couple of days ago. I think here was Sunday. No, actually it's Friday. Here was Friday. So I was actually waiting for the price to come into this, break through this resistance and come into this zone. So from the past, you can see that price, it came up, it touched a resistance, and boom, came down. After this, it consolidated like a little bit. There were some indecision handles. It went up. It broke. It touched this resistance. Now, if some of you guys might think that, oh, like if the price comes to resistance, that could be a point where we can take a sell, right? Fair enough. You can take a sell. So, but at the same time, what I keep in my mind is like you always need to think like the banks, right? Because if you're trading, the banks are trading with you, right? And the banks are the big boys who always want the best price, the best possible price, which they can get before they can go in and sell or buy, right? So now if price reached this area, the price has reached this area at this point as well, right? So this won't be the point where the market makers, as you may say, may want to trade, right? They would want a better price, for example, here, to trade with and to sell so that they can get the best out of their positions. That's why we waited. Because if you would have taken a sell here, you would have gotten some profits, but eventually it would have stopped you out, right? Because here you can see it breached through this area. The candle closed above resistance, but then it was pushed back down, right? But then slowly, as you saw, like later in the day, early in the day today, all these candles, they went up. They went into this resistance zones. What I think is this was the push which the market makers needed, right? Because they needed this push to actually like bring Australian dollar New Zealand all the way back down over here, right? So when it came to this point, I saw this first candle, it stopped. Then the next candle was at this point as well, and the one after that, I decided, okay, like, you know what, this would be a moment where we can take a sell, right? We took a sell, we placed our stop loss above our consolidation zone, and then, like, you know, we were off to the races. We came over here, and then around, I think 3-4 hours ago, there was New Zealand news, which actually pushed it up. Actually, the news was good, right? Now, here's the interesting part. As the pair is moving down, New Zealand news comes out. New Zealand news was good, which would push Australian dollar and New Zealand all the way down, right? But instead, it went up. This is the prime example of where banks like to trade, right? They pushed up to create liquidity. After they had that liquidity, the news, it actually got absorbed into the market, and then the price actually started to move the way we wanted it to move. So this is how you test, actually you base your entries off the 1-hour chart. Another thing that I want to touch on is like how to take profits, which is also one of the most crucial part of swing trades, how to take profits, because let me just zoom out over here. Okay. So what you guys want to do is, let's go into our daily chart. Our daily chart. Okay, taking profits, taking your profit targets. Okay, so now all you want to do is you actually want to look left. You want to look where there was recent consolidation. Okay, if I am looking at daily chart and I look to my left, I see there was some consolidation over here, and then there was some consolidation over here. This also acted as support, right? So what I can safely say is that this could be our first take profit point, right over here. This could be our first take profit point. Now this is a swing trade, so this is actually, I think this is 100 standard pips away, or like almost 1,000 micro pips away, right? This could be a really good first starting off take profit point. After this, I look at the next consolidation area or the next support where price found support where it was rejected, right? So if I come down from here, I see an area right over here. You see this? Price went up, it touched this resistance, support becomes resistance, it came down, and it bounced from this point over here, right? So this can be our next support. So if I draw another support over here, now you see if you look to your left, you can clearly see that this same support holds true in the past as well. Like this support was resistance over here. It was support at this point. This is probably like some news push, but it was support at this point as well. Right, so this can be our another take profit point. This is also, I think, almost 100 standard pips away, like 1,000 micro pips, I guess. Right, so this is your take profit points based on the daily. Now, after this, you want to zoom into 4 hour. So you want to know exactly what happened at these points where you put your take profit point, right? Because like if you don't know what happened in detail, like it won't really make sense for you to just put your take profit points in and just like let the market do its thing, right? Like you actually want to know what happened. So if you go in your 4 hour, okay, I'm just gonna zoom in over here. Okay, so price is over here. It's coming down nicely over to this point. So now here you can see that price found support at this point over here. This was actually a trending consolidation, which I like to say. This is a little word I made up myself. This is trending consolidation. Most of you guys might be thinking, well, if price found support at this level over here, why don't we have take profit at this level? The reason why we don't have take profit at this level is because there's no like hard support. Like this is all minor support, guys. Like this is minor over here, this is minor over here. Like price is at minor support at this point because we want to target our major supports. Actually, what I'm going to do is I'm going to lower this down over here, down to the closing of the candles, and I'm going to create a consolidation zone, like which you might want to change the name to the wick zone. Okay, so this is the part where we are actually expecting our price to fall down to, right? Because this, now, once price reaches this level, it's going to slowly trickling down, right? Because you saw here that it just kind of like fell straight down. Now the price is going to consolidate and it's going to slowly trend all the way down, right? Now at this point, we're just predicting what the price would do. One thing you want to do is you never want to predict what the market would do, right? Or you never want to hope what the market would do. So what I'm hoping for the market to do is to consolidate at this point and then finally reach our first take profit point at this level, right? Now, once price would reach this level, it's the same thing, guys. Like you see right over here, this big consolidation. This area was basically like a range zone, right? Because you see here that the price came into this level, it got rejected, came back up, got rejected, went down all the way to the support, went back up, rejected, and then came back down to the support as well. So, and this support was actually resistance in the past. You always want to look left. So after price breaks through this area, it has to come down to this zone for our second take profit, right? So once price comes to this area, we're going to do another webinar And we're going to do another analysis of what the price may do after it reaches this area, because this is a very hard support, and after price reaches this support, it can bounce away, right? It can bounce away to this area over here, right? It can bounce away to this area and then come all the way down, or it can do like some random stuff which we don't expect, but eventually the price has to come down through here. Now, another thing that I like to do to put my take profit points is use my Fibonacci. Now, I'm not sure if you guys are familiar with Fibonacci. Ruben, do most of you guys know Fibonacci? Okay, Ruben is not here.
Most people don't.
Don't?
You can do a quick tutorial if you want.
Okay.
Well, I do, but most people don't. They really don't use that tool.
Okay, so I'm going to do a Fibonacci tutorial here as well. It's going to take like 5-10 minutes. So basically, I like to draw my Fibonacci on the daily charts. If I go into my daily, I like to draw my Fibonacci on my daily charts. Now, Fibonacci tool is basically, it measures the retracement levels, right? Basically, like, I like to use it in a way to map out different zones, like where the price may go or where the price may react, right? So that's why I like to use my Fibonacci levels. Now, in this case, it wasn't, the price was in an uptrend, right? It's in an uptrend, so overall it's retracing down, right? It's retracing down, it's going to go up and it's going to retrace down, it's going to go up and then it's going to retrace down. When you're expecting the price to retrace down, you draw your Fibonacci from swing high to swing low, right? Let me just bring it up over here. Fibonacci, oh, there we go, Fibonacci, okay. So at this point, we see this was our previous swing high, and this was our swing low over here. This looks really, really complicated right now. Okay. Is there a way that we can bring these numbers over there? No.
To do what?
To bring these numbers. Okay. Okay, perfect. So this is our, okay, let me just take off these colors, visibility. Okay, I'm just going to make these colors a little lighter because they're a little too, okay, there we go. Perfect, Fibonacci levels, okay. So now these numbers that you guys see over here, 0.236, 382, 051, 051, 618, 786. These are the levels where the price can basically fall onto. These are like retracement levels here. If you look closely, you will notice that, let's start from the top. The 786 level, it acts as resistance at some areas and it acts as support as well at some areas. Same thing goes for the 618 level around here. It acts as resistance. It acts as some sort of support as well for some areas. If you look at 0.5, see if it's extended here, it acts as support. It acts as support over here as well. Same thing with 0.382. It acts as resistance here, acts as support. And so on, we go to 236, acts as support, acts as resistance, and so on, right? So these are retracement levels which price action actually respects and bounces off and off from. Um, Now, I basically drew these levels to just so that I know where my previous structures were, right? So here I can see my structure was over here. My one structure is over here. My structure below this is over here. And then my last structure low is over here, right? So from this, you can get a clear idea that, okay, if price came down to this level, we can have a take profit point as we had earlier, our take profit point. And after this level, we can have another take profit point at these levels down over here, these levels down over here. So this is where Fibonacci extension tool comes in handy, because if you are watching price action, if you're watching price action like we are right now, I guess I hope you guys are still in this trade, because this trade has still a lot of momentum to go. Now we're watching price action here, so we're expecting price to come down to the 786 retracement level, because overall it's in an uptrend. So it's going to retrace to the 786 level, right? After that, it can bounce up, and then it can come down to this level, or it may breach down to this 618 level, right? Like it may retrace down to the 618 level as well, because you see over here, actually let's go in the past over here, right? We saw the price go up to this resistance zone, it got rejected, it came down all the way to the 0.5 level, 0.5 retracement level, right? It was an uptrend, it retraced back down to the 0.5 level, and then it went back up again, right? After this, it came into this consolidation zone, it got rejected, it came all the way down, like see where it had the stops, right? It first stopped at the 618 level, right? It went down, came up, went up, came down, and it started falling down to the 0.5 level, broke through, and then it found some sort of resistance at the 0.382 level, right? After this, it broke down to the 0.236 level, and then it finally came all the way down here, where it was at a oversold position, right? And then we just waited. Actually, I took this trade up till here. I took it in the buy, and then I quit. I closed my trade because maybe I should have let it run, but I closed my trade. And then this morning or yesterday, I saw, okay, it was at the same level as before. It was actually overbought, right? So the only way for the price to go when it's overbought is all the way down. So what I did was I drew my Fibonacci, and then I went into my 4-hour chart. I went into my 4-hour chart, and then I started to look for entries, right? So now if you zoom out into your 4-hour chart, you will have, this will get a little messy, but you would still kind of see what I'm basically talking about over here. Okay. Now see, it's in a nice downtrend over here. We see some sort of consolidation in this area, but this shouldn't bother us a whole bunch, because this Fibonacci, the first Fibonacci level is where our first take profit point is. So it would consolidate at this level and finally reach our take profit point. So in a way, you can see in the 4-hour chart how these Fibonacci levels hold true for all the structure support it has given to price action, right? Like if you see over here, this was a nice trending zone, like it was just ranging in this level. It was ranging between 6.8 and 0.5 level over here. Same thing for the 0.382 and 0.5. If you look in the past, this level over here, and all the way at the bottom, this is a far stretch level. If price reaches this level here, 0.382, this would be our ideal take profit point. I think this would be around 0.4. This would be around 20. 2,800 pips, around 3,000 pips, something like that, a little more than 3,000 pips. This is what we're going to aim for. But yeah, guys, that's what we look for. So let's do a little recap. What you want to first? Oh, what happened over here? I guess price action wasn't ready for this. Okay, so what you want to first look at is you want to look at your weekly charts. Okay? You want to look at your weekly charts. You want to see if price is at a overbought position or not. So here in the weekly, we saw that price was at our overbought position. We're like, okay, perfect. It's in the overbought position, so we're going to draw a resistance at this point. And then we're going to go into our daily chart, see what was going on there. Okay, so we go into our daily chart and we look, okay, it's actually at our overbought position. So we just set our resistance. We draw, well, I like to draw my consolidation zone all the time. I like it because that way I have a clear view of actually like where the price may bounce off, right? I do this and then go into our 4-hour chart to see what was going on. We go into our 4-hour chart and then we just patiently wait. We just patiently wait. Even if price comes over here, you just want to patiently wait. You want to wait to see what price does, because how price behaves in this area is crucial. Right? That way you can get those nice wick entries, which I tried to get, but we were a little bit early. You know, no big deal, but we were a little bit early. So we go into a 1-hour chart, you can see more detail, and as soon as I start seeing these big wicks, I took my entry. We took my entry over here, and then we sent a signal that, okay, we're taking our entries, and we're going to put our stop loss above the consolidation zone, because this zone wasn't really breached in the past. Let's go back. See right over here? It hasn't been breached in the past, so that's why we put our stop loss right up over here. Okay, and then we just let the market do its thing. We saw here we were in negatives for a little bit, and then we came in positives, came in negatives again, went in positives. There was a little push. We went in negatives, but you know, our stop loss was still safe over there. And then we're well over in positives. I think we're around, Ruben, I think we're like 500 pips in, 400, I'd say. Close to 400. Let's see here. Yeah, close to 400. We are in profit right now.
Close, yeah, we're close to 400 micropips.
Yeah.
40 standard.
Okay, close to 40 standard micropips. Okay, so at this point, right, what I would do is I would take my stop loss and I would put my stop loss 100 pips in profit. The reason why I would do that is because I have my resistance over here. Right now, what are the odds that the price would reverse from this point and break through my resistance zone, right? There are like very less odds that the price is going to do that, right? Even if it does that, right, our stop loss is well over the profit. Like our stop loss is 10 standard pips in profit, right? So I personally believe that there's no way that the price can come back here, right? I'm going to knock on wood, but still, like, you know, we got to be optimistic. So there's going to be less chance that the price would reach this zone again. So that's why our stop loss is in profit. So right now it's a risk-free trade. What I would suggest is now we're probably going to send a signal in once price reaches our take profit point of I think first one was around 1.06500, I think. Once price reaches our take profit, we would want to bring our stop loss into 30 or 40 standard pips profit, because you always want to do that. You always want to bring your stop loss into profit, so even if the price moves against you, you're still profitable, right? Because you never want to lose a winning trade. So that's what we basically do to manage our swing trades, and Patience is key, guys. This trade is going to take probably like a few days to develop. I might be, if all goes well, if price actually move towards my second take profit point, I'll be looking to hold this trade over the weekend because I would want to see what happens if it really goes to my third take profit point, which would be around 300 standard pips. So yeah, that was our little breakdown on why we took the trade and how we actually took the trade and how you want to manage your trade once you're in profits and basic stuff like that. What are one thing again? I'm going to say that this area over here, I think this price is 1.05 thousand. Let's do it at 5,000. This is the point, this is my key point. This is where I would like the price to reach, right? Because if you look, this is where the price was rejected. It rejected over here. So this is what I would say is my equilibrium price. This is my price where I want the price to come down to, ideally. Okay, and okay, perfect. So I guess we're going to see you guys in another webinar once the price reaches this point, or once we see that, okay, we have another potential profitable swing trade in. So we're going to do another webinar based on that. Now, if Ruben wants to say something, go ahead. Otherwise, we are done with this hypnosis of Australian dollar, New Zealand CAD. Ruben.
Hello, sorry. I was on a phone call. Let's see. Okay, so I just want to discuss this USD GAPI trade. Um, as you guys can see, it came down the 4 hour. As I look left, there's a little zone right here. You can see. Yeah, as a trader, you always have to look left. And sometimes you don't see it. But as you can see, history tends to repeat itself. It hit this line right here, and it went down. It was just impressive how it just went down on me, and you just have to plan your trade accordingly and be able to do things, and be able to talk about this trade. And everybody's asking, what happened to this trade? Just hit the resistance, came back down. 1 hour chart. It's right there as well. You always look left. It's having trouble loading right now. I don't know why, but anyways, this is a real time chart. Um, Now I want to discuss this USD cat trade. Um, I see it's pushing up again. It's in that zone though. That zone that I see that Raquel was talking about. It's on that zone where we want to sell, and it's in that area. It's creating this little double top window. It does not form a perfect V formation, but it does form it correctly. Um, let's see, it's right at the peak. It should curl down, but it's a bit early, and I feel it's going to go down based on price action. I use price action as the best indicator. I tend to go based on the candlestick patterns and etc. and then based on history, and I believe that's the best for everyone. Um, let's see, Raquel. I don't know if Raquel wants to add anything. But that is it. We call the sell about right here near this line. I tend to go down. We're not going up, doing the drawback. In my opinion, hit this line. I thought it's sending this little support, minor support in my opinion, but it should break. We have our stop loss passing this zone above 10 pips. This means it's a breakout, and that's where I put the stop loss. The risk reward everyone's asking me, and I tend to do this. Everybody asks me, oh, where's the risk at? Where's the reward at? Let me see. It's just right there. That's a risk reward. Two point 12, not bad. Um, but yeah. I like to thank Raquel for the analysis. This is what we've been doing for the future. USD CAD is pretty standard trade. Just it's up there. The zone. This strike times right here is my zone for previously. I was in the trade right here, and then it came down and came up. This was, I believe, in September. Yes, but I tend to use bigger charts for better analysis. There's my trend line, I believe. Um, yes. So in the 4 hour looks good. I expect it to come down in the next couple hours. So I'm just gonna be patient with this trade and let it run. As a swing trader, you gotta be patient and take your plan. And my plan is just to, get down here. Hopefully it makes some movement. Hopefully it surpasses and I can move my stop loss to right in the middle. And it's important for you guys to have a stop loss and set that correctly, or you won't be able to make profits. It's all psychological, and it's all just up to you. As far as our business, we tend to do swing trades just because we feel it's more accurate doing on bigger time frames. Scalping's a bit harder for us to do. We'll probably do that in the live trading room. But that is it. I'll let you think. Cal for analysis. Don't know if he wants to add anything or not. But let's see. My other pair I'm looking at is Yuri Jappy. Let's see, I have my lines drawn. Everybody's asking me, what are these little dots? They're just a parabolic scar. They're kind of accurate, kind of not. And at the end of the day, remember, indicators are indicators. The best indicator world is this big candlestick. As I can see, Euro Jappy went up, hit this little minor, no resistance, and came down. I expected it to come down right here, hit it again, go back up. I don't really see a breakout based on the euro. So I'll just wait for this trade. For USDJPY, I entered about right here, personally. 102.97. It went up about. I entered about right. So was it here? Give a second. Oh, I entered right here. Excuse me. I entered right here. Right this little line. Went up. My stop loss was right here, so I made pips. Dropped back down, hit our stop loss, I believe. And we're just looking at trades. USD. Just looking at overall. Set a major support. I still don't like this trade. I don't want to touch the Euro USD based on fundamentals. Many was asking me when we're gonna trade the JPD USD. I'm not gonna touch this forever. Not for a while. I feel like this drop. A lot of people blow their accounts, and it's important to put the stop loss we set. If you don't put the stop loss, then I don't feel you're trading correctly, or you're trying to make money, and you gotta learn how to take losses sometimes. The market goes against you. Um, Everybody knows the music cat is my favorite player, so that's why I keep watching it. Everybody's asking why did I call a sell? Based on this pin bar, it keeps making this pin bar. I call it the pin bar. This is a reversal candle right here. I went down. It's gonna probably just stay there now and consolidate, in my opinion. But I feel it's gonna come down during London. It's gonna come down and make a move. As you can see earlier today, I did the exact same thing. Hit, went down, went up again. It's gonna test it again. And that's pretty much it. Let's see. Yeah, everybody trades differently. Everybody trades differently. It's all up to you and your trading plan. My trading plan is just straightforward. Look at the candles, look at your indicators. Use it as a reference only. Don't just go based on that. Use the candlestick patterns, memorize them, and get things done. Uh, let's see. I saw this earlier today. I don't know if I took it. Boom, boom, boom. This would have been beautiful. A, B, C, D. Oh no. I thought I was gonna form an M pattern. In all honesty, I had a buy limit right here, but let's get. I'm probably gonna go keep going down. Test this again. So go down here, draw up a little bit, go down. But yeah, that's pretty much it. That's pretty much our analysis and how we do things. And I don't know if Raquel wants to add anything. I'll wait for him to mute himself. Trading, it's pretty straightforward. Just you gotta learn how to do the basics and the maneuvers and all of that. So, yeah. Oh, he's offline, I believe. Oh, all right then. I just wanted to make sure you guys know about our website. It's called TradingNotice.com. Yes, this is our website right here. It's called TradingNotice.com. It's our company right here that we do our analysis. It's me, Raquel, our presenter right now, that explain his theories behind it. We also have Eunice, who unfortunately couldn't be here due to college problems and college study. These are three basic, free, basic, Platinum. Platinum is the one we're going to do a live training webinars and, hopefully get people acquainted. And some people don't have the time to come, but I just feel that, let's see if anybody has any questions. I don't even know if it has any questions. Okay, so live training rooms will be like that. We'll explain our trades and go through pairs and see what's going on in the markets. I usually like to trade the New York session. That's when it most movement. Also the London. Right now it's pretty basic. No stock markets are open, and it's just the Asian markets. I don't really like to trade the Asian markets personally. But it all depends on the setup. If there's a great setup, I'll take it. And yeah, this is for informational purposes only. So please know that any investment is free of a risk, and it's going to come in handy. Uh, but that is all. I would like to thank everyone to participate in this webinar. We'll be recording. Hopefully, have it soon up on YouTube for all our premium members and all that. And I hope whoever is in the Platinum group enjoys our signals. And you ever have any problems, just email us with your unsatisfaction. I want to build this company based on you guys. I don't want to do it just on me or anybody else or my benefit. I just want to benefit you guys and see what you guys actually want. I don't know if you guys want me to review any other pairs. I have a whole list, Euro CAD, but it's pretty basic. I don't really like to do. I like to do the same seven major pairs. Sometimes I'll do auto jockey or some other pairs, but yeah. Anyways, yeah, this is my chart. I want to thank everyone who made it out tonight. If you couldn't make it, we'll be recorded. This was for informational purposes only, so just make sure you take any risk at your free will, your free risk. We're not responsible for you blowing your account. Always use risk management of 2%. Always use the risk calculator that I have provided for you. Everybody have a good night. Hope you guys enjoy this webinar and this information. We'll be recording. I'll post that up shortly on YouTube. All right, good night.